Alrighty, so we've gone through the theory of kind of, how we're looking at now at swing structure, that larger internal structure, and then the fractal structure within that. I think we can kind of get the theory of it. Let's actually now apply it to real life price action examples and see how we can actually use it to our advantage. So what I'm going to do is I'm going to go through 2 weeks worth of price action on the M15 chart. As I think that's the time frame that is going to help the majority of the community, whether you enter on the M1, the M5, the seconds or whatever, or even if you enter directly on the M15, if you have more of that swing sort of trading approach, this is the time frame that pretty much nearly all of us need to be nailing and have our best understanding on for that sort of intraday direction. So without further ado, let's just dive into it. Now, actually, before I do say that, the month of May for 2022 is when this has been recorded, has been quite tricky. I know a lot of people have been getting sort of caught on the wrong side of the market a bit, or potentially scratching their heads as to why some POIs didn't work and things like that. But let's dive into it, and I think this will, I'm excited to go through this because I think you'll really see how having this deeper understanding of structure, and we're not even looking at the order flow aspect of it just yet. We'll get onto that next. I think this will really open your eyes to potentially how you can avoid some trades, to potentially how you can get into what previously you may have considered too aggressive, i.e. buying against the trend and really poorly priced areas. This can really help us to potentially do that, or at least have that deeper understanding of price action, which is never going to be a bad thing. So don't want to keep waffling. Let's just dive into it. Now, I think it's very, very relevant to where we are with the current price action that we're going through to actually, do be aware of where we are in higher time frames. Because I'm not going to spend too long talking about this, but basically we are coming into this extreme monthly sweep zone. It's going to refine it to the wick, okay? And this is where price action is at the moment. So not going to bother doing kind of a whole monthly, weekly, daily high time frame analysis, but it's more just about understanding we've come into an extreme area of value for bulls. Okay, so it wouldn't be too surprising we do see a bit of bullish pressure coming off such an extreme level. Okay, so going into the 4-hour chart, get rid of that massive orange line, and we can clearly see, right, we're heavily bearish, right? Big long-term swings to the downside. So swing structure is pretty simple on this one. All right, we can clearly see that was the last swing pullback and we had a break of structure. So now our 4-hour structure is between the highest point that broke this low after this low was printed, and now we are selling off. So from a 4-hour perspective, we would consider this to be a swing high, whether you draw your supply from the pivot there or from the single candle. Okay, let's just put on the single candle and be nice and refined. Other levels, we have another pivot here, right, led to a break of structure. And then we also have, we can see, we essentially have this whole supply range, but we can refine it to this wick here that sits just above there. So yeah, from POI perspective, again, don't want to main focus to be in all of this. We're going to try and keep it more talking about the, obviously the theory we've just gone through, but we can see, right, no inducement in this leg here, and it didn't sweep anything. So it's very likely a zone like this will be used as inducement for something like this above, right? We can see that this had this movement here. Then we came down and then we swept that high that caused a low. So yes, that's a pretty nice sweep zone. And obviously we have all of that liquidity behind it for potentially that extreme POI there. But anyway, so the POIs aren't really too much the main focus here. It's structure, like I said. So from a 4-hour perspective, we've had that break of structure. So what do we expect after a 4-hour swing break of structure? We expect a swing pullback. And typically what we would look for is that 4-hour chock to give us that first signal that we may be putting back, right? Okay, cool. And remember, we are in that monthly extreme demand zone. I'm not going to bother looking left and trying to find super old demand zones. I'm not even sure the data actually goes back that far on the 4-hour chart, on this data feed at least. So M15, where are we? Well, obviously we've been selling off quite aggressively, kind of little movements in price here. And then we've had a pretty decent pullback there. So for me, that is a swing low, okay? And then we get that swing break of structure there. So let's quickly put our little pretty circles on now, because we're going through 2 weeks worth of price action and we're looking at some points it's going to be a bit advanced or whatever. I am going to try and do my best to go through this a bit slowly, because I do realize I have a bit of a habit sometimes of speeding up, and I'm conscious everyone's at different experience levels and understanding levels, and some people English is not their first language. So if it is a bit too slow for you, you guys can just use the 2x speed or whatever you want to use. But for the rest of you, I'm going to do my best to go nice and slowly and go through this. And I'll probably break it up into 2 separate videos, right? Otherwise you may get a bit sick of my voice and also lose concentration. Anyway, so M15, this would be our swing high here, okay? And we've had that swing break of structure. So what do we expect after a swing break of structure? We expect a swing pullback, okay? What's the first thing we can look for? We can look for a little change of character, right? Now, obviously, we want to be looking at those larger internal swings to help us, right? So for instance, this would be how I would view the internal structure, right? And then this is also an internal pullback, but because it's quite sizable, that's a swing, right? And then we get this movement down here, right? We get that internal movement there. So for me, the chalk and the IBOS would be in the same place, right? So let's play fast forward a little bit. So we're just moving around, nothing's happening. So we'll do through Asia. Let's see what happens over here. Okay, still no bullish chalk. Okay, so now we have the bullish chalk, and now we have a candle closure above that line as well. So we've had both a bullish chalk and both a bullish internal break of structure, right? An IBOS. Okay, cool. So that's a pretty decent sign that, we're getting that swing pullback. We have this area of supply as well. So this would be a decent area in which we could potentially look for the trend to continue, right? Okay, so yeah, let's play this forward a little bit. Now, what would we typically say, right? We know looking for shorts is pro the M15 swing trend, right? The swing trend is bearish. This is our swing high. We can now mark on our swing lows. We've had a sizable swing pullback. Okay, so shorts are pro M15 and pro 4-hour trend, right? Cool. So we've had that pullback. We're coming up roughly more to the premium. We have this nice refined supply level. This would be obviously a high probability area based on all of that confidence to look for shorts. Okay, and that's absolutely fine. We've had our bullish internal break of structure, so we would expect that break of structure, the internal structure to continue bullish. And then once we get that bearish IBOS, right, and the internal trend switches bearish, that's when then we can assume this low has obviously failed to then take out the high. So the origin of that pullback, that orange bullish internal trend, is now weak. Once we get that bearish IBOS, that's when we assume then that the bearish internal trend will stay bearish until we take out this weak low, right? That's literally kind of as simple as we want to keep this theory that we've been using with the internal structure, right? So when we're looking at these slightly larger internal swings, not the chalk, not the little candlestick pullbacks, but those slightly more significant internal pullbacks, right? That's what we assume, that it's going to stay bullish to pull back. And then once we get that bearish IBOS, right? And this has obviously failed to take out the swing high, then we assume that this leg of price action is now going to get run, and we assume that the bearish internal trend, or the internal trend, will stay bearish, right, until we take out this low. Now that might not happen, right? We could come into some demand within here, right? And then we may get a little bullish chalk, and that's the first sign that maybe this low might be holding for a bit. But that bullish chalk could just be what? Just to come into the internal high. But if it doesn't, and then we get that bullish IBOS, what does that then signal? That then signals that the start of this trend here, this bearish internal trend, is now weak, right? And now we can assume that this bullish internal trend will hold until this high goes, okay? But again, that high doesn't have to go because it could come up and it could mitigate something in here, even though we assume this internal high is weak, right? But we don't assume it's gonna hold. But if we see that bearish IBOS then continue, then we can again assume that this is gonna hold, that bearish internal trend, until this low goes. Right, and that's kind of the simple premise that we're going to use here for reading internal structure, right? For when it can get a bit more complex, we can get big, larger ranges for that, okay? So I just want to kind of get that in nice and early to sort of remind us of what we're looking for. Now, in terms of chalk, that all still seems the same. So if you're looking at this right now, you should be very, very familiar with chalk. And if you're not, please go back and really get that nailed before kind of trying to understand, these concepts, okay? Right, so kind of coming in towards sort of Frankfurt and London for the day, right? So we've had another little, fractal break there to the upside. So at this point, that would be our chalk level, right? Because all of those candles break the prior candles high. I don't want to spend too long talking about that because you guys should be very familiar with chalk. Now this one, it's a bit of a tricky one to see. When you're backtesting, you can miss these, but if you're in a live market, price is moving a little bit slower, so you can spot it, right? We've had the pullback, we had the movement up, and then that candle fails to break the prior candles high. Then we have the movement up, and then we have the movement down. So we have now had a bearish change of character in, let's see, right, the premium of this swing range. Okay, so we know we're at good value, but we haven't hit our refined level. We know that we don't have to. Ideally, we do. We could be coming off this supply range, right? Whatever. We have also had potentially a sweep of liquidity, right? And it looks like, a nice sweep, nice wick breaks, sort of reasonably aggressive moves to the downside, nothing too major yet. Probably looks nice, quite nice on the M1, but if you look at the M15, it's not that significant, right? Now, let's play this forward a little bit. Okay, so now we're starting to sell off a little bit more, right? And we've had a break of this low here. So we know we've already had the fractal break, we've had the chalk. Now this is a bit more of a convincing internal break of structure, right? So that's a bit better than just a chalk, okay? So now we are well within our rights, and I'm sure I was looking at this back at the time to now look for shorts from here, because we know ideally we want to be selling from, the unmitigated POI at the premium, because we know that this could just become, right, inducement for higher. We know that, but we also know price doesn't have to, especially when we're selling off aggressively. We've pulled back to the premium. We've had a decent sweep of liquidity. We've had a bearish change of character, nice big wicks there, and a decent amount of momentum, and also session timing, right? Frankfurt's opened. And we've also, which is what I like, we've broken this little internal low here, right? We've had a fractal break, now we've had an internal break. Okay, cool. But this is where, and this is why it's a bit more advanced, we kind of need to read, how do I say, like there's also larger internal swings as well as a smaller swing, right? So we know we had this internal pullback here, right? And then we had that bullish eyeballs there. So we also know that we could just have a movement like this to then continue higher, right? There's going to be kind of those larger internal swings, and then there's also going to be the smaller internal swings within that, right? Because we could have that as a bearish internal breaker structure here, right? And then that could just be bearish like this to come into, say, this demand level, maybe something within here, right? And then that could switch bullish here. And then if that happens, then we assume this high is weak, and then we can look for that to happen, right? And all that was if I now change this to a different color, it might help to see. All that was this internal movement here, right? And this is the fractal nature of the market and why this is a bit more of an advanced concept, okay? And why it can get a little bit confusing. And you can get some mixed biases and et cetera, et cetera. And this is why it's going to take a bit of practice. It's going to take a bit of adjustment too. But this is really how we can bring our trading to the next level. But don't worry, we'll go through tons and tons of examples, and you guys will really start to get used to this over time, okay? So, like I said, we have had this little bearish eyeballs here, right? Maybe I'll make it a bit of a different color so we can try and separate them out a little bit. I'll try and do green for like the smaller swings, the smaller internal swings. I'll try and maybe use blue or orange, right, for the larger ones. We'll see how we go. Okay, so more than okay, right? In my opinion, to be looking for pro-trend shorts from here. We've had the sweep, we pull back to premium. Yes, we haven't mitigated anything as refined, which is not as high probability as if this price action happened up here, right? But for me, I'd be happy to look for some shorts from in here, right? So you'd want to see a nice M1 change of character, right? We get our M1 entry model, right? And then we can target, potentially looking to go for the swing low. But with our deeper understanding now, we also know that this movement here, right, could just be to come into this level of demand here, or potentially something within this leg here, right? Again, because it's about understanding those slightly larger swings that could be happening, right? So this is where you just have to go with the flow, look for areas that make sense to you, manage your risk accordingly, and then, potentially look for longs from within here and just be a bit more of a flow trader, right? React to price rather than necessarily predicting, being open to both bullish scenarios at all times, okay? And this is why it's a bit more advanced and why you need to have that deeper understanding of price, right? Okay, cool. Try and speed this up a little bit. So we've pulled back up into that level, all right? And then I'm not going to go down to the M1 and look for entries, but if you want to go and investigate these afterwards, I can tell you that there wasn't an M1 change of character within here. I'll tell you what, let's go with it, load. Right, yeah, sweet. So you can see how price just shot all the way back up and we never got a bearish shock within here. So if you took a risk entry, that would have been a loss, okay? But it is what it is. That's going to be dependent on your own plan, how aggressive you want to be. So kind of the point I want to make here about this is obviously everyone's going to trade slightly differently and have slightly risk tolerances. But the idea of this lesson is to understand, well, there's a few things, but one thing that specifically about this POI would be that you may want to be more conservative with your entry model here when you understand that if this occurred up here, it would be a lot higher probability. So maybe if this price action happened here, that may be where you want to set that refined risk entry. But because it's down here and because we understand that this could be inducement for higher prices, or this is just that pullback to do that, right? And you'd rather wait for a more significant internal breaker structure, this is then maybe where you want to be a bit more conservative with your entry models and you want to wait for that M1 CE, the confirmation entry, rather than taking a risk entry. Okay, that's really just the point I wanted to make there about that, okay? So then we continue to the upside, right? And we have that internal break of structure. Okay, cool. So let's play price forward. and then we come into our nice level here. So at this point, you are, again, more, it depends on your plan, more well within your rights to be looking for the M1 entry model within here. We are coming into the extreme unmitigated supply zone. Yes, of course, price could, mitigate something within here, but we've already had, a pretty decent movement down and movement away into here, filled up a lot of those orders that led to that movement. So I don't really like viewing those POIs as too significant. You can refine it to the unmitigated wick, but again, it's very, very small, right? That's more of an M5 zone. We've already had a reaction from the distal, so it's nailed on this. So I would prefer to wait, if we came up higher from a zone like this for a lot more confirmation. Whereas with this one, this is the unmitigated POI, right? Single candle POI that led to that break of structure. So for me, this is a high probability zone. It's part of that supply chain, right? It's swept to this high here, et cetera, et cetera. For me, that's a very decent M15 zone, just looking at the M15 chart, right? Obviously, there's other bullish confluence. We're coming off that extreme monthly level, et cetera, but let's try and keep it reasonably simple. So if it's within your plan, pro M15 POI, to look for the M1 entry model as soon as it sets in, that's absolutely cool, right? It's not to say that you can't take these trades, but I'm just talking about other confluence that you can or cannot wait for. It's up to you. That's what we're concentrating on here, right? Is structure mainly. So if you wanted to wait for the bearish change of character, all right, obviously you would wait for that low to go. If you wanted to wait for the internal structure, so obviously that's the fractal structure, but if you wanted to wait for the internal structure to be on your side, that's what we would look to break, okay? So if you say get your M1 entry model within here, right, you can then use that as information because you can still get short, but you can understand, okay, maybe this fractal low will hold and will go up higher, or maybe this internal structure will hold. Because before what we were saying, right, is if we come down and got our bearish chalk, okay, now we've pulled back, now we have an M15 bearish change character, therefore the swing low is going to go. And whilst that's partly true and partly a confluence that we can use to denote that maybe now price is ready to finish that swing pullback and make that movement, the stronger confluence that we now have is that it's only when you get the bearish internal break of structure that then we can say that low is weak, right? Because essentially we're viewing it like this, right? And then once we get that and that bullish internal trend then switches bearish, like I was saying at the start, now we assume that this bearish internal trend will hold until that low goes. And if it doesn't, fine, we wait for the bullish internal break of structure and then that high becomes weak. And then we assume that will hold until here. Then maybe we can mitigate something within here, right? And we might get a change of character, but that change of character might only be to come and mitigate, right, the internal low at that point. It's only when we get the bearish IBOS that now we can say at least this is weak and the bearish internal trend is going to hold until that low goes. But ultimately, from a swing structure perspective, we'd be looking for that low to go. So hopefully that kind of makes sense of the points. That's like the main focus of this concept that we're really trying to drive home here. Okay, cool. So I just wanted to make that clear that it doesn't say you can't look for the M1 entry model within here, but yeah, I think you guys get the point. Right, so we now do get our bearish change of character, and again, we can still be looking for shorts. It's absolutely fine because we come into a high probability level, but it's not until this low goes that we can assume that potentially this low is now weak, right? So we have to be aware that price could come into here, mitigate something, give us that bullish change of character, and then we would be targeting that weak internal high, right? So let's see what happens. Okay, so the candle does close and we get our bearish internal break of structure. So this is what I was saying. Now we would assume that this low is weak, right? We've had the internal trend, now switch bearish. So now we would expect this bearish internal trend to hold to take out our swing low. So we can keep selling or trying to catch these lower highs, right? Because that now allows us to be a bit more aggressive because before, maybe you don't want to sell that deep in a discount. There's a bit of demand within here, but as long as that larger internal swing stays bearish, in theory, these are can be high enough probability, depending if you want to trade that, right? Because yeah, that's just the way in which this concept can really help us to do that. So now we've had that bullish IBOS. Another point I want to make is if you're sitting here on the M1, right? We know we've pulled back to the premium. We've had our bearish change of character. We've also had our bearish internal break of structure. Everything is now aligned with swing structure. It's now high probability to target that weak low. But if you're sitting on the M1 and you're just trying to sell every little M1 pullback, right? You have to understand after that internal break of structure on the M15, what do we expect? We expect an M15 internal pullback, right? So that's why if you're starting to keep aggressively selling down here, you have to be aware that that's lower probability. You don't have that stop loss protection because it's likely now we're going to get that move right before we go. Okay, cool. So levels we can look at. I'm not going to draw them all along because we really will be here all day, but we want to try and catch that M15 internal low, okay? And then we get another break of structure, okay? So at this point here, after that break of structure, right, we could then try and look for another pullback to then try and take out that low, okay? So it's not always, like I said, after this straight internal break of structure, we're instantly going to get the pullback. We already know that with swings. Like here, if you had kept selling on the M1, potentially you would have got away with it. But just understand it's lower probability. You want to be selling them, before the break, really. Okay, so we're trying to catch the lower high, and then that goes. Did we get a break of the M15 swing low? No, we didn't, right? We haven't closed below it so far. So far, it's just a sweep liquidity. We don't have that confirmed M15 boss just yet. Now, this is where this concept can come in very, very handy, right? Because we've kind of questioned if price has a really good attempt at taking out the swing low, right? But it fails to do so far, right? And let's say we start to pull back. Well, let's see what happens next candle. So, right, an aggressive retrace. Is this high now weak, right? Can we start to hypothesize that now we're going to come out and take out this high, or is this high weak, or are they both weak? How do we know that? Because I've seen plenty of times where that happens. It's a sweep, and then we break this high, and then we come down, or we break this high, and then we switch bullish, or sometimes it can just reject supply and it can go, right? All those probabilities can happen, right? We're always playing with probabilities, but what systematic framework can we use as like mechanical rules for us to make decisions for when this scenario happens, for when price fails on this attempt to break and close below the swing low? Where is our weak structure, and what do we still deem to be strong structure in which we can continue to short from, right? That's the question. So here's what we're using as a rule. For now, we are assuming that the internal trend is going to continue until it doesn't, right? So we have had a break and closure below that last internal low where that boss was. So now we are assuming that we are still between this internal high, right? And then this would be the internal low. So yes, it's not a good sign that we've swept that low, especially with an aggressive retrace, considering where we are with on that monthly demand, et cetera, et cetera. You have to obviously bring those confluences in the back of your mind if you're trading this live, but let's just concentrate on the concept. At this point, we can still short because we assume that this internal high will hold, right? And this is just a pullback to potentially mitigate something in here and continue, right? It's only if we were to get that bullish IBOS here and we get a candle body closure, right? Now this high becomes weak. Why is that? Well, remember what we said with this internal structure, we switch bullish, we come back, right? And then this is up to here. Then we get the bearish IBOS. So then at that point, what do we assume? Then we assume that that low is weak, which is the start of that pullback, right? So then we assume that the internal trend is going to stay bearish, right? Until it takes out that low. At this point, it's still bearish. But then if we come up and we get a bullish IBOS, which would be this movement here, right? Now this high is weak, right? The start of that leg, the start of that bearish trend has failed to take out the low, right? The swing low. So now we assume what? We assume that it will stay bullish until it takes out that high. Really, really hoping now this is kind of starting to drive in of how we're trying to use this concept, okay? So at this point, right, we know it's not a good sign that price has swept that low because that's quite a bullish confluence, but will this continue? Well, this is what we're going to do. We're going to assume that this bearish trend will continue between these highs. So we can look for some shorts within here, right? Again, you don't have to, because it is lower confluence now that we've had a sweep, we're coming off the monthly demand, it's aggressive. You don't have to, but it's just, this is the framework in which you can use to make those decisions, right? So let's play price forward. Let's see what happens, right? And then we get that bullish IBOS. So now with this candle closure, the internal structure of those larger swings has switched bullish. So now it's not a guarantee, but it's a very strong possibility that this high is now weak, because this is when we have the confirmation that it failed to take out the low, because that trend has now switched bullish. And now we can look for longs, if you want to, right, to target this weak high. And that's it, right? So hopefully you guys can see how useful this sort of method can become when you wrap your head around it. Because what will happen is a lot of traders will potentially look for shorts from here. And again, this could play out, right? This can absolutely play out, but it's about understanding from an internal structure perspective that we now view this as a weak internal high, right? And we expect it to get run. So you could look for shorts from here, but just understand that it's likely to just be a pullback, right? Imagine, we get a bearish chock, right? It could be a supply chain. It is pro M15 swing trend. And that move could happen, of course. But you want to be aware of, it's maybe lower probability now because this is a weak high. And if you do take shorts, maybe be a little more aggressive with your management, because that could just be that internal pullback to form the next higher low to then continue this trend, right? Because this is the internal trend now. We switch bullish, and that could just be a fractal chock to give us that pullback to continue higher, right? hopefully the puzzles that, the penny's starting to drop now. Okay, cool. So let's play this forward a bit. Okay, so we're starting to pull back. And again, like I said, this literally could hold and we could take out that low because swing trend is the most powerful, right? That is the overriding, you know what I'm trying to say. Just playing this forward a bit because we're just chopping around, trying to bring it up to nearer to London. Okay, so let's bring it forward a little bit. Just bring it around to about Frankfurt. So at this point, what's happened? Well, we still know we're bearish with our swing trend, right? This is our swing high. Potentially we're forming a bit of a supply chain here, right? We've mitigated it, but we also know that the larger internal trend is bullish. So we know that this could just be a pullback to go up higher. But what we've also had is we had these nice equal highs and we had a sweep of that liquidity, reasonably V-shape. It's not that strong, but it's there. That then gave us a bearish change of character. Where would it be from this low here, right? So we've had a fractal bearish change of character to the downside, right? And now you could be forgiven for thinking, follow the swing trend. Let's get short from here, from London Open, and target for that low. But what do we know? We know that this could just be that pullback to continue higher because the internal structure is still bullish, right? We haven't had that IBOS, right? We need a candle closure. So that would be the level we would need to see, right? And also when we pull back, what do we also get? We then got a bullish change of character here. So this is just very, very, ultimately, really, it's just a range, right? It's stuck between this low and this high. It's not really going anywhere. So it's not high probability conditions. And we swept these lows here. Just going to draw that on, right? We've swept the highs. We haven't had our bullish IBOS yet, but if we look at the internal structure, right? This is our low, this is our high. We've had a bit of a pullback. Yes, we did sweep this high and have a bearish change of character, but then we swept these lows, right? And then had a bullish change of character. So it's up to you how aggressive you want to be. But what I would say at this point is shorts are low probability. Even though they are pro M15 trend, they are low probability because we've now swept this sell side liquidity. We know the large internal structure is bullish. And after sweeping that liquidity, we've now had a bullish change of character, right? So shorting from here is low probability in my opinion. Long from here, again, is aggressive and you can do it, but it's maybe, let's say, not the highest of probability because it is counter trend. We have had a sweep liquidity and this could just happen, right? So this is if you want to kind of be the most conservative, you would just sit in your hands. But if you want to be that a bit more aggressive, you now have the understanding that the fractal structure's aligned with the internal structure. This has failed to do its job now, and it's very likely Frankfurt Open, not very likely, but a decent probability we can now target these highs to get that next movement to the upside. Especially when you combine, right, coming up again off the monthly level, sweep liquidity here, blah, 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 blah. Okay, but it's just looking, you guys understanding more about why this short's not great. And if you want to take that aggressive long within here, right, you can now understand the logic behind what previously may have seemed like a low probability or too aggressive trade. This can give you a bit more of a framework to understand these positions, okay? So we reject that level. Bit of movements around. I'm not going to dig into the M1, right? But you guys can go back and back test this if you want. For now, we just want to really have that high time frame understanding. Okay, so now we have that bullish IBOS. So now this would become, our new larger internal low, right? But we're still bearish on the swing structure, so we have to bear that in mind. Now it's up to you. If you want to keep looking for longs within here, right? You can do that, right? We have demand zones here. I'm not going to draw them all on because we'll be here all day, but that's what you can look for, right? Again, you could buy within here if you wanted to. Understanding, yes, it's against counter M15, yes, it's in the premium, but hopefully this gives you a lot more of a solid framework to look for these more aggressive positions. But you just maybe want to be a bit more aggressive with your management as we come into these levels. Now, let's say you were focused on wanting to, because we still assume, right, that this is a strong swing high on the M15 and this could hold, and we could then get that movement to then finally take out that swing low, right? I'm just going to move this back to orange. Cool. So again, you can look for your own monetary model within here. I'm not saying you can't do this. This is just focusing on, trying to get a deep understanding of price. Now, where is the change of character? Well, all of these candles break the prior candles high. So to get our bullish M15 shock, right, to get fractal structure realigned, we would need to see this low go here. So now for me also, that's a reasonably decent pullback. So I'd also view that as some decent internal structure. So that would be both the fractal low and an internal low. But this is where price can get a little bit kind of like this section here, where you've got those smaller internal swings and you've got slightly larger internal swings, okay? And this is why it can get a little bit more advanced and complex at times. It's not always as nice and clean like this, okay? So what I mean by that is you have this movement, you have that internal pullback, And then you have that internal leg. And then we have, if I use green to show you the smaller swings within that, right? Like we have these movements here, right? So appreciate this is a bit messy, but if we were to come down, not only would that be our chalk because that was the last, fractal low, that is also going to be a green IBOS of the smaller swing, but that green IBOS could just be to come into the orange low, right? Because that's the big pullback, that's the orange move up, that's the orange pullback, and then that's the orange leg up. And then you have the smaller green internal structure within that, right? So although you get a bearish IBOS there and we can look for shorts, you have to understand that that could just be to come and mitigate this low. And then if we get that bullish IBOS there with the green structure, right, then we know that we can target that high. Okay, so this is where structure can get a lot more complex. Sometimes if you're not sure if that's the IBOS or if this is, and that's where you kind of need to have that, be able to read between the lines and look at both here. Okay, so what happens? We come down into this level and then the demand holds. We don't even get a bearish change of character. We don't get a bearish IBOS. And then we break this high. What happens with a swing structure? Let's see. Okay, we just sweep it by a micro pip. We're going to switch bullish. No, okay. But if I zoom in, you guys can see this. What do we get? We actually get the bearish chalk. So I'm just going to move that up here because that's the fractal low, right? That was the last candle to fail to break the prior candle's high because we had an up movement, a down movement, and then an up movement. Just going to make that orange. It's easy to see. Ooh, not that color. Okay, cool. Now, so at this point, we've had a sweep of the high, tiny one, but it's then on the list, and we've had a bearish change of character. So again, you can look for shorts from within here, right? It's pro trend, etc., etc. You guys should know this by now. Did we get that little IBOS here? Not yet, because we need there to be a candle closure, right? But remember, this is the two ways we're looking at structure. We have this larger swing here, and then we have those little swings, right? Imagine this is that green line, okay? But if we do get that candle closure, that could just be that green, let's make it green, right? That could just be that green trend just to come in. I'm going to keep drawing this. I know you guys probably get it, but I really want to make sure it's clear. That green bearish trend could just be to come back to mitigate here and then go, right? Cool. So let's speed this up a little bit. So coming in there, right, nice some shorts, but it's only then do we then get that bearish IBOS, right? Cool, and then again, you could look for some shorts from there as well, right? Tap into that range there, and then we come down. Now at this point, especially as we're kind of coming into the extreme of sort of that, that orange low, is it as high probability to keep looking for shorts from here? Maybe, right? Because it's pro trend, we've had the sweep, that bearish order flow may continue, right? And that could happen. And it's going to be down to you to whether or not you want to wait to see what happens if this low breaks or not. You just have, but this is about understanding why maybe things don't work out, because in this instance it fails and it goes up higher. So now what we've had is that bullish IBOS of the smaller internal structure, right? Now hopefully you can see what was going on. So I'm just going to draw it on one last time, right? We have the orange movement, which is the larger internal structure. And then we have that leg up there, right? And then we pull down into here. And then if we get the green, all right, that's when we were looking at these smaller swings, right? Looking for the candle closures, all right? And then we could come, actually that candle didn't close above. So technically, if you want to be very strict, right, that would actually be the low. And then that would be your IBOS there, right? But this is where I can get, you can use a little bit of discretion here and read between the lines. And then when we get the break of that high, right, now we know that this high is definitely weak. We've aligned and we can then look for that movement there, okay? Hopefully that makes sense. But it's just about understanding why sometimes these things didn't work. And if you were looking for shorts and then you're confused as to why, we didn't go on to take the weak low, it's because we can see that larger internal structure never switched bearish, right? That's the real point. But sometimes structure will get a bit complex and a bit messy, but it's knowing that, and only once this low went here, that's when we can have a lot more confidence, right? If that broke, now we can really start to look for that movement, right? Unless that happened, okay? And then right. Hopefully you guys are really getting this. Cool. So now we come back in, right? And then you could look for those longs, right, to target at least that weak high, which then ends up being, finally, we get our swing break of structure. And I'm going to play price for a little bit to get to the next interesting bit of price. And then this is obviously when the M15 has switched bullish, and we can potentially anticipate that for our, let's have a look, for our pullback up to these levels, right? And that's when we can start to play that. Because what have we also now had? We have had a bullish 4-hour change of character, right? We swept that low and then we came up and then we took the high. came back into that 4-hour demand, which is under confluence, right? There's loads of other confluences we could be looking at, but I'm just trying to really drill it home more about the internal structures, okay? And now we can look to follow the trend to the upside for a bit. So it's going to play us forward to a bit more of an interesting bit of price. But like you can see, even I got caught out with this in the live market, right? Trying to take a counter trend short. So I think we came into this level of wick supply over here, and that gave us just a little bearish chocks. And you think, okay, after an M15 boss, what do you expect? An M15 pullback, bearish change of character, that can start the pullback. But we know just on its own, especially when the start of a new trend, when things are very, very a lot of momentum, we don't often get deep pullbacks. Just trying to trade that short and M15 chock can catch you out. Because really, looking at these swings, we can see the swings. It's just super bullish, right? It's just really about waiting for those internal structures to align. That can give you a lot higher probability rather than just a chock. Chock is just the most aggressive form of structure. So we smashed through that first, which we knew was a rubbish 4-hour zone, right? Because it had no inducement and it didn't sweep. Now coming into this larger zone here. I don't want to spend ages looking at supply and demand and trying to refine it all. Just kind of really want to focus on the internal structure. Okay, I'm take a sip of water. All right, so we're pulling back. Not even a shock, not even in a bearish IBOS. All right, nothing going on just yet. So let me try and get it to a bit more of an interesting area. Okay, so now we have a swing breaker structure. All right, and we know we're within that 4-hour supply. I'm just going to move that away so we can focus on price. Okay, cool. So the 4-hour is bearish, right? We know we could potentially see a 4-hour lower high from here, or for a minimum, right? What we can expect is potentially a little bit of a 4-hour internal pullback to then continue higher to premium supply, or maybe we'll switch bullish because we know we're coming off a significant level, etc., etc. But at minimum, we're in a nice, decent 4-hour level. It is technically a sweep zone. It has inducement. It's in the premium, so we can expect a bit of a reaction. What's the most decent thing? Not decent, but an obvious little signal we can look for, right? Because we had a bit of a fractal pullback there. Is we could look for a 4-hour chock to signal that we get that, and then potentially we get a 4-hour bullish chock, right? And then we know we can then look for that movement there, right? That's decent. We should all know that by that point, and that's something that we look for. Okay, cool. We should all be familiar with that. M15 swing low would be the lowest point that took out the swing high, right? So that would be here. We are bullish. Okay, now what happens? So we get a bearish change of character. We have had essentially, right? It's the nature in which price does it as well. We've had all of these nice equal highs. We're within a 4-hour POI. We could go look left and see if there's any M15 supply, but blah, blah, blah. Let's try and speed this up, right? Now I had a bearish change of character, but it's also that V shape. So that's like quite a bullish sign, right? That's the M1 entry. What do we look for, right? Liquidation, high time frame mitigation, V shape reaction, chock, right? So that could be a decent level to try and catch that 4-hour pullback, right? Even though we know the M15 is still bullish for now, but when we're in 4-hour supply, that is when it becomes higher probability to do what? To play counter M15. You don't have to, but these are the areas in which it becomes higher probability to play them, or at least have that understanding that maybe you don't want to keep buying the M15 trend because of where we are and the nature in which we've reacted within here. Liquidation, mitigation, V-shaped reaction, chock. Now in this instance, for me, that would also be a bearish IBOS because that's a reasonably significant little movement there. Okay, so we have this M15 demand, which is obviously pro M15 trend. It did sweep liquidity. It led to a break of structure, right? That's fine, but I just explained why it's not high probability to keep buying from here. You can, and it can play out, but it's about having that understanding, as I keep saying. I know you're bored of me hearing it, but I have to drive this home, right? So we know this is our swing high, and this is our swing low. Now, like I keep saying, you are again well within your rights to look for the M1 entry model within here, but this is about understanding why you may not want to do that and when to wait for more confluences. Because that's the question we get a lot. When do I wait for an M15 chock? When do I wait for M15 supply demand to fail? And in what situations do I not wait for that and I can be aggressive with the M1? Well, when you can wrap your head around all of this, this is when you can make those decisions, right? On a more of a case-by-case basis. And again, I'm sick of saying this phrase now, but getting that deeper understanding of price action, right? Okay, so we come into this demand level, it's pro M50 trend, but we know probably not a good area to wait for. So two ways of kind of viewing this, right? One is you only want to focus on the pro M15 position. So what I would advise you wait for in this instance, but you don't have to, is at least wait for that bullish M15 change of character, which, we're looking at relative price action. We could potentially view as an IBOS as well, but I'd be more, looking at that larger swing, right? That potentially it could be just to do that and then continue lower. But at least if we wait for that, we have a bit more bullish order flow and a shift of fractal structure on our side. Because if you get an M1 change of character within here, yes, this could play out, but it can also just be just to mitigate this and then continue lower. So ideally in these scenarios, if you want to get in, the best sort of ideal way it can happen is price comes in. Imagine this is the M1 now that we're looking at, and you get an M1 entry model, right? And you get in long, but you get in long before price has reached here on the M15, right? Because then when price does come up here to the M15, you can now remove your risk, right? Whether that's trading to stop your stop loss to break even or removing profits, right? Because then once it's there, if that then holds and we don't get that, and then this comes back down, right? You've removed your risk. But what happens is either people don't get in, they see that movement, and now they're trying to buy here against this, and that's where you're taking those unnecessary losses. So that's hopefully clear as to why you don't necessarily want to do that. Okay, so let's fast forward a little bit and see what happens. Now I said there's two ways you can view this. So the first one was if you're just concentrating on the longs and you want to wait for a bit more confidence, you want to wait for this to break. The second way, and this is the more advanced way, is if you want to take the short, right? Because again, we've come into that 4-hour level. We've had this big liquidation, the V-shaped reaction, decent movement to the downside. This is bang on around Frankfurt Open, right? And you could look to say, okay, I want to take this long because the internal structure is still bearish. So I'm happy to accept the risk that, yes, this is more aggressive, but I want to take that anticipating that we're going to switch bearish and risk rewards on my side, etc., etc. But it is more aggressive because, of course, you're trading against M15 demand in the M15 discount against M15 trend. But again, it's having that deeper understanding of this is how you can be more aggressive if you want to, right? And there was an M1 trade within that. Okay, and then that's that movement away. So now the M15 switches bearish, right? This remains our swing high. Okay, cool. So now potentially, again, if we go back to the 4-hour chart, this is what you have to, have the back of your mind. We've now had that bearish 4-hour change of character. Make sure, yeah. We've had a 4-hour change of character from 4-hour supply. So now, this is what would we say before? We would say, okay, we've had a swing pullback, we've had a bearish chalk. So now it's all systems go to take out this low. Well, not necessarily, especially when we have an unmitigated extreme above, especially when we're coming off that monthly level. We don't have to worry too much about that. What this is more now is how we really view this, and we should have known this anyway, but trying to really drive this home is with a chalk, right? Especially with the momentum that we've come here, it could just be, and if you look at all my analysis and markups back then, right, it can just be that larger internal pullback to then do this, right? And again, that can just be that to then do that. But it's only when we get, like if that came down and then got that break of internal structure, those larger swings, now we say with conviction that we're going to take out that low. But when we just see the bearish chalk, that's the first signal that potentially we're going to come down. But all we view it as is just an internal pullback to then do that, right? So yeah, hopefully that's clear. So we have to have that in the back of our mind. We can't just look for shorts and then just hold full volume on thinking that we're going to take out that low, right? But what does that also help us is it also helps us to be on the lookout for longs as well, right? To potentially catch that internal high low, right? So even just target this high or up to here, or if you've really got the hard time frame foresight, right, to try and potentially anticipate we're going to come off that monthly level, right? Cool. So back to the M15. How can we now interpret this for this trading day? Well, we know we've got the M15 extreme up here, right? And we have this level here. So what's the first thing we can wait for? We can wait for a bullish change of character. Okay, so we're starting to sell off. The chalk line will be, let's see, here, all right? Okay, so now we have a bullish change of character. So that's a good first sign. The way I would view the internal structure is this nice clear movement here. So this bullish chalk could be just for price to come up and mitigate, right, the strong lower internal high. And then we can look for an M1 entry model within here, or maybe you want to wait for a bearish chalk, right? And then we can target this low. Okay, so very kind of a simple one here, right? So let's play this forward. Right, so you don't want to be shorting from this high because this high did not break anything, this high, right? If you look at the movement down, it didn't even give us, did it give us a bearish chalk? I don't even think so, right? That wouldn't be the chalk level. Yeah, it would be, sorry. That would be the chalk level. It didn't even break that. So this is where, potentially you could take an aggressive long here. I'm not a big fan of zones like this where there's a big wick underneath because it's not always super clear if it's going to come down. But that's just, you don't want to be shorting from here because that high is not broken anything. This is about as weak as that high can get, right? So then we'd be looking for price to come into here. In this instance, it doesn't. It spikes up through, sweeps those perfect equal highs there, and you can, it's an aggressive sweep entry. You could look for a potential entry within there. But did we get a bullish IBOS? No, because we never got a candle closure, right? So this is still, that internal high, right? That's still intact. So what we are now looking for is we're still looking for this low to go, right? Because that's the movement, right? And that's just one movement there. Okay. So what I'm actually going to do here, we'll kind of wrap up this video now. This is the last sort of bit of price action we'll go through for this video, and then we'll wrap that up there and potentially do some more in a separate one. But let's look at this as the orange structure, and you'll see why I'm doing it this way. For now, we've had that internal break. Okay, we had our bullish change of character, but we know that could just be to facilitate the movement, just this strong internal high. Okay, so then what happens, let me use a different color, is to facilitate, let's use orange, to facilitate that orange pullback to this lower high for then that next movement here. Within this orange pullback, what can we have? We can have internal structure of the internal structure, right? And that's what we get, right? You could view that as an IBOS, right? That little movement here. You have to see how that's different to the size of the orange pullback, right? And this is where you have to use that little bit of nuance. And then we have that bullish green internal trend, right? The smaller internal trend. So when we then have that sweep of liquidity up here and we fail to close above the orange structure, the orange structure is still bearish. So the orange internal trend is still intact, okay? We look at the M15 price action, right? We do get a bearish chalk because this is that M15 low. So the fractal structure is now aligned, right? It's bearish. So before what we'd say is we've had a swing pullback, we've had a bearish chalk, so now we can take out the swing low, all right? But with a deeper understanding, it's not until we get a break of this green low that then we can truly say that that low is going to go, right? Because this green internal trend of the orange pullback could still be intact, and it could be a bearish chalk just to mitigate demand within this low to then continue higher, right? So although the chalk is a very, very good signal and we can still trade with that, it's not to say that we can't. It's just about understanding what could happen, right? And it's only when we get the break of this green IBOS here, that's when we can say with absolute conviction that it's very likely the orange low is going to go. So let's see what happens. Okay, so then we do get it. All right, so now we can say that this low is going to go. So let's see what happens next. But we start to pull back. Okay, so what happens now? Well, we haven't obviously closed below the swing low or the orange internal low. So we haven't had a bearish IBOS. So now we've had a good go at it, and we're retracing. Is this high now weak? Well, remember what we said back with this example right at the start, right? When we swept this low here, right? And then we started to pull back and we got a bit of change of character. Is this high weak? No. We assume that this high, from an internal structure perspective, we assume that this high was still strong because it did lead to an internal boss. It's only once we got the closure above here that now this high became weak, right? Because once we got that bearish boss here, this green trend should have stayed bearish, and it could have from here until it doesn't. But once it switches bullish, then the start of that bearish trend then becomes weak, right? So if we go back here, what's happened? Well, we had the bullish green internal trend, right, as part of the orange pullback to take out this low. The orange trend is obviously still intact. We haven't had a close above there. But in terms of the green trend, it was bullish. Then it switched bearish. So now we can expect that internal pullback, right? And we can expect price to potentially come into somewhere from here, okay? So that's why at this point, we don't say that this high is weak, and we can still look for some shorts from here to then target the weak green internal low and the weak orange internal low. Hopefully that makes sense. Watch that back if you need to, right? So let's see what happens. And this is where we can keep looking for shorts, right? We've got an M15 POI here, just quickly show you, right? Buy to sell wicks, et cetera, right? And then that's just where you can be aggressive and keep looking for those trades. Okay. Now, this is the orange boss line, right? Do we have a break and close? We don't until then. But if I bring it back one candle, where's the line? There we go. Okay, here. So we fail to close below. All right, that's fine. It's not weak yet. We need the structure to switch bullish. Then we get a bullish change of character, but it's just a liquidity grab, right? we still have both the green and orange internal structure as bearish, right? So chalk doesn't mean a lot on its own, okay? So do you want to buy from here? Maybe you don't, but you're buying against, all of this weak structure against counter M15 trend. It's not high probability. You want to wait for that green structure and the orange structure to switch bullish right at that point. So now we have that break and closure below, right? So now where's the new orange structure? You can see we've had that pullback and that pullback. But that's, for me, that's now a convincing swing structure, okay? So that's just kind of how you can view that with the larger internal structures there. Let's just tidy it up a little bit. But yeah, it's kind of the key to see, like, you've got the larger internal swing, right? And you have that. Let me draw it on like this. 1, down, up, down. And then within that, I know this could be a little bit pedantic, but it can really help, okay? And then within that, right, we have this. And then we take that low, then we have that little pullback, but that does not mean that because we failed to take out the low, or even when we swept it, that this high is now weak, because we know that as long as the green structure stays bearish, we can still go down, right? And then that's what happened. Now, do you recognize this sort of price action? Well, if you remember back to here, that's exactly what happens here. Except, in this instance, the swing's bullish, but just pretend we're bearish, right? We have that orange movement down, right? And then we have this green pullback. And it's only once we got this IBOS here that now we can say that this low is now ready to go, and then we can look for that movement here. Whereas if it had to come down here like this and then gave us that bullish chalk, now this high is weak, right? So that would be here, right? And I keep saying right, I'm gonna try and stop saying that. If let's bring it back to here, right? Sorry. Oh no, I shouldn't have pointed that out because now you're all gonna notice it. So I know you guys probably really get this, and this is frustrating, but I'm going to end it on this little mini lesson, and then we'll potentially do some more examples in a separate video. But we have this movement down, we have this larger in swing, and then we have this movement down. Then we have the green movement. We failed to close above, so the orange internal structure is still bearish. So we come down and we can look for shorts, etc., etc. We can target this side, that's all fine. But let's say price failed to break this green low, and then we got a bullish M15 chalk here, like that. Now we can assume that potentially this high is weak, and then we can target that high to be broken. Cool. Hopefully that makes sense. That's all the point I was trying to make through there, and how you can add this into your trading decisions, right? And then eventually we get the swing break of structure. Okay, let's just see quickly what happens after this now. So this would be our new swing high. Right, and then let's keep going. Let's go for a little bit. So this is all just one swing leg down. Then we get a bullish change of character. I'll tell you what, we'll be going for an hour. Let's pause it because I don't want you guys losing concentration. And then, we'll see how many parts this goes to. But I am keen to kind of bring it all the way through to the 27th of May, which is another week or so, because there are tons of more lessons and examples that we can go through, okay? But I'll leave that there. Watch this as many times as you need. I appreciate some bits were pedantic, but I think it's really important you nail this, because there will be some instances in which this can get a little bit complex in the live market. But yeah, this is super powerful when you really get it and the penny starts to drop. I know, when we combine it with order flow, it's basically the exact same thing we've been looking at, but we're going to start to draw on basically supply and demand ranges, and it will make it maybe a bit visually easier to see. But if we can nail it with structure first, it will become a lot easier when we start to introduce